Something is happening in the global economy that has sent a shockwave through the financial system, and most people haven't even noticed. Recent customs data shows China has been importing absolutely staggering amounts of silver, shattering seasonal norms. In the first 2 months of 2026 alone, imports surged to over 790 tons. Then, in March, they reportedly imported around 836 tons, a figure that's more than 170% higher than the 10-year average for that month. This isn't just another market move. It's a quiet hoarding of a critical asset, and it signals that the financial landscape we know is changing. In this video, I'm going to show you why this is your wake-up call to protect your wealth with the one asset they are scrambling to get their hands on. Section 1. The Silver Tsunami. What is happening? Let's put this into perspective. For years, the silver market was relatively balanced. But what we're seeing now is a fundamental shift. China has gone from a net exporter of silver to one of the world's largest importers, and their demand is so immense it's physically draining silver from Western vaults and shipping it eastward. This isn't a single event. It's a trend that has been building. Year to date, China's silver imports for 2026 are the highest on record. This explosive buying is creating a massive gap between the price of physical silver in the East and the paper price traded in the West. Buyers on the Shanghai Gold Exchange have been paying huge premiums, sometimes 12% or more, over benchmark prices in London and New York. At one point in early 2026, that premium was equivalent to an extra $17 per ounce. When a market has to pay that much extra for the real physical thing, it tells you one thing: supply is tight and demand is desperate. This isn't just a small arbitrage opportunity. It's like a giant vacuum cleaner sucking up the world's available physical silver. So the real question is, why? Why are they doing this now, and with such urgency? What does China know that the rest of us might be missing? Section 2. The twofold reason for China's silver binge. China's unprecedented silver buying spree isn't driven by just one thing. It's a powerful combination of two distinct, yet equally important forces, one industrial and one financial. First, the industrial engine. Silver is absolutely essential for the green energy transition, and China is at the center of it. Specifically, silver is critical for making solar panels. China is a dominant force in global solar panel shipments, and that industry's appetite for silver is exploding. The solar sector's use of silver has been growing dramatically, taking up a larger and larger share of total global demand each year. Some reports suggest that manufacturers were front-loading their purchases ahead of potential changes to export tax rebates, creating an even more intense short-term scramble for the metal. But industrial demand is only half the story. The other half is a powerful vote of no confidence in the current financial system. Across China, we are seeing a surge in retail investment demand. Every day, people are piling into physical silver bars as a more affordable safe haven asset compared to gold, which has become much more expensive. This isn't just a speculation. It's a cultural move toward tangible wealth. In a world of uncertainty, holding a physical bar of silver feels a lot safer than a digital currency or a government bond. This retail rush is a key reason why the price premiums in Shanghai have been so high. When you have the world's largest industrial base and a population of over 1 billion people all trying to buy the same physical asset, you get the kind of market dislocation we're seeing right now. China is putting immense pressure on the market, both for its factories and for its people. But what are they protecting themselves from? Their move isn't happening in a vacuum. It's a direct response to a much bigger problem unfolding right here in the West. Section 3. The cracks in the foundation. The US dollar's dilemma. The problem China is hedging against is the accelerating decay of the US dollar and the mountain of debt that backs it up. For decades, the world ran on the dollar, but the foundation of that system is now cracking under its own weight. The Congressional Budget Office, CBO, projects that the US federal budget deficit for fiscal year 2026 will be a staggering $1.9 trillion. Let that sink in. The country is projected to borrow nearly $2 trillion in a single year just to keep the lights on. The total national debt is at the highest level in American history, and it keeps rising. What's even more terrifying is the cost of servicing that debt. The interest payments alone are on track to become one of the largest expenses in the entire federal budget, rivaling national defense spending. This creates a debt spiral. We borrow more money, which increases the debt, which increases the interest payments, forcing us to borrow even more. This is the very definition of an unsustainable path. And the direct consequence of this is currency debasement. Every new dollar created to paper over these deficits devalues the dollars in your wallet. Your purchasing power is being systematically destroyed. This isn't a conspiracy theory. It is simple math. Compared to where it was in the early 2000s, the dollar has already lost a significant amount of its value, and the pace is quickening. China is one of the largest foreign holders of US debt. They see the writing on the wall. They understand that holding trillions in US government bonds is a losing game when the currency is being actively devalued. So what are they doing? They are strategically diversifying away from paper promises and into hard assets. Their record-breaking purchase of silver isn't just a trade, it's a strategic de-risking from the US dollar system. They are exchanging their paper claims for real, physical metal. If you're starting to see the bigger picture and finding this analysis valuable, take a second to hit the like button. It helps the channel bring this information to more people who need to hear it. Section 4. Silver. The simple hedge and your investment strategy. So, if China is making a strategic pivot to silver, how should you be thinking about it? The answer is simple. View silver as essential wealth insurance for your portfolio. It's a tangible hedge against the very economic instability and currency devaluation we've been discussing. Silver's dual role as both a critical industrial metal and a historic monetary asset makes it uniquely positioned for this moment. Here are 3 core strategies to consider leveraging the same trends driving China's demand. First, and most directly, own physical silver. Buying physical silver bars and coins is the most straightforward way to protect your purchasing power. In a world with a growing disconnect between the paper price on exchanges and the actual price for physical delivery in places like Shanghai, owning the metal itself is paramount. The physical silver is flowing to the highest bidder, and right now, that's China. Owning it yourself ensures you have a real, tangible asset that can't be devalued by a printing press. Second, for those who want exposure without storing the metal themselves, there are ETFs and mining stocks. Exchange-traded funds like the iShares Silver Trust, or SLV, track the price of silver and offer an easy way to get into the market. For those with a higher risk tolerance, silver mining stocks can offer leveraged returns. If the price of silver rises, the profits for mining companies can rise even faster. The falling gold-to-silver ratio, which simply measures how many ounces of silver it takes to buy 1 ounce of gold, also signals that silver may be poised to outperform. Third, think about diversification. The traditional 60/40 portfolio of stocks and bonds is no longer the safe bet it once was. In this new economic environment, a portfolio that includes a significant allocation to commodities like silver has proven to be far more resilient. Some analysts suggested that an allocation of up to 25% in commodities and critical metals could be a much safer structure for the years ahead. Of course, there are risks. The silver market can be volatile in the short term. The key is to view silver not as a get-rich-quick scheme, but as long-term financial insurance. The structural case is undeniable. We are in the 6th consecutive year of a global silver supply deficit, meaning demand has outstripped supply for years. And with mine supply struggling to keep up, that deficit is only expected to widen. So, let's pull all this together. China is buying silver at a record-breaking pace, driven by a perfect storm of unstoppable industrial demand and a massive flight to safety by its citizens. This monumental demand is happening at the exact moment the West, particularly the United States, is facing an unprecedented crisis of debt and currency debasement. The physical flow of silver from west to east is a tangible symptom of this global economic rebalancing. The warning signs are not just on the horizon, they are here. The structural supply deficit is real. The fiscal situation is undeniable. China's actions are a clear signal. They are trading paper for metal. They are preparing for a world where the US dollar is no longer the undisputed king. The time to protect your wealth is now, before the crisis becomes front-page news and everyone else is scrambling for the same solution. Don't wait to buy insurance when the house is already on fire. What do you think is the biggest driver for silver right now? Is it the solar panel boom or the flight from the dollar? Let me know your thoughts in the comments below. And if you want to stay ahead of these massive economic shifts, make sure you subscribe and hit the bell so you don't miss our next video.